Hello, dear viewers. I'm Akif Mateen. I'm welcoming you all to join our live session today here at Forex Wave Expert YouTube channel. And I'm Akif Mateen. I hope you all will like our session today because today we are going to discuss some more things about the market. Uh, in previous week we had discussed on live how the market may react according to the next upcoming news and many uncertain movements. And in some cases, the market acted a little bit, according to it, not that much, I would like to say well enough. But let's just check it out how we are gonna assess, our previous performance for the last week. So before moving on, I would like to appreciate your concerns on liking our videos, and obviously don't forget to subscribe our channel to get to know more about it, because our goal is to just let you know our point of view on different trading instruments. If you would like to add any pair, you can also on the right side of the screen there's a chat box, so you can write over there, and from there we can actually assist you so that we can have a good discussion today. So, before starting, as we always do, let's get back to the previous week news aspects. Let's talk about that as the very first. Like last week, we had China manufacturing PMI, which eventually it was positive. Sorry, but according to that, we saw that US dollar affected kind of like weak on that particular day. Like for example, on gold, if we zoom on in on the Monday, we will see these bullish trend of close to like 180 pips, bullish pips movement we had seen on gold. And after that, the whole week, US dollar was much stronger and gold had some bearish movement, except on the Thursday it was totally sideways. It ranged like 80 pips or something, and on Friday it went up. Now, how things actually had been, let's get back to the discussion. Last week, one of the most important news of the month released for US dollar, which was NFP, and we have seen it was close to the previous value, but long short than the pre-revised value, and obviously the forecast value. So yeah, for the long term, US dollar can have scopes to act a little bit weak according to this news. And we have also seen that pound also increased official cash rate, and for that, no love for British pound. It actually eventually it eventually got some bullish move after the NFP news happened on Friday. So not because of this news, because I guess people already knew. So the fact was all the fact of realizing the effect of this increase of the rates has been already priced in the chart, as we can see over here on these movements on the previous week. So now if we can focus about what the news is going to come for the next week, at first we would say that there is a holiday for Australian dollar and for Canadian dollar too on the Monday. Now for US dollar as a major reserve currency of the world right now, even we can say that if there is any US dollar bank holiday, then we would see some strong demand on US dollar on that particular day. But it acts kind of like opposite for other major currencies. Like let's just say on Monday we would have experienced some weak movement on Australian dollar and Canadian dollar too. So if that happens, then we can say that on USD CAD we would experience some we would experience some USD CAD bullish movement on the very Monday, or some kind of like choppy at these zones. So uh, it may create some indecision zones over here, a little bit higher than there. But in the long term, if the USD CAD acts in a such way that on before Thursday news, there is a high chance that US dollar may act stronger. So in if by any chance it goes 150 or 100 pips up above this level at 1.355 from 1.3375 level, so we can say that yes, there is a chance of bullish gap right over the top. But for now, we cannot say anything because of these factors that's going to come later on this week. There are some important news, and we have some important discussion related to it. Like for example, we have Japan's news on 30-year bond auction on Tuesday, and we have one of the important news for US dollar trade balance news on that day, because recently US dollar has increased its rates. Now, how the consumer portion of the market adjusted, how the manufacturer portion of the market, adjusts it, that is a matter to, denote and to follow. Now, for US dollar, if the trade balance news becomes negative, that means though US dollar been increased rates, it adjusts negatively on consumer and manufacturer relations. Now, if the value is positive, then the opposite happens, and US dollar can have a possibility to act a little bit stronger. Now, for the Chinese CPI news, one of the most important news on Wednesday to be released, it's likely that it's gonna go a little bit less due to many sanctions. Okay, pardon me. Sorry. So, so on Wednesday, we're saying that the Chinese CPI is going to release. Now, according to our thinking, we're eyeing on a fact that on that particular news day for China, the effect of Chinese yuan will be negative, because if the CPI, you were saying the forecast is less, right? Now, if we can see the trend of it, it may also, we can see that decreasing from 2.1 to minus 0.5 forecast. So if that continues, then there is a high chance that this news can be negative. Now, if that becomes negative, US dollar will become stronger on that particular day too. Now, we have 10-year-old bond auction news for US dollar on that particular day. We have the most important news to be released on Thursday for US dollar is USD CPI and core CPI, both and YY. Now, these news directly affects the thinking and the ecosystem of interest rates mechanism. So for obvious reasons, this is a very important news. Now, there's a high chance that this news may react kind of like negatively, though the reports will be positive. Now, how and why, we'll come to the discussion on some coming minutes. Okay. Now on Friday we will see that we have Japanese yen bank holiday, and on 12 p.m. Friday we have another important news for British pound, which is GDP MM, and we have core PPI news on USD on that particular day on Friday too. So now let's hop in some of the important news and facts. Now we are seeing that Fed's Bowen signals more hikes may be needed to cool inflation. Now it's kind of thing that if you want to get rid out of poverty, you need to get more loan. So the USA and the US consumer-based, service-based economy, this is kind of act like a strength of sign of strength, that yes, they have acknowledging the problems. In normal cases they don't do, But when they do with the solution, that means that yes, they are eyeing on some very confident factors that can act very positively for their currencies. Like Fed's Bowman signals more hikes may be needed to cool inflation. Now, inflation needs to be cooler, less than 2% at least. In the article, you can also find that. Yes. But, uh, you know, how hike, more rate hike can stabilize that? The thing is, if bank gives more security on more returns, then the many business entrepreneurs are likely to put a good amount of money in the bank for safety. Now for that, the banks and institutions can have a good amount of liquidity in their pool to fill the gaps in those businesses and factors and sectors to which it needs to have taken a very special care of, and that stimulates the cooling down of the inflation. That's how the fundamental and macroeconomic factors works as a ecosystem way. Now, how we can find that that this could be a very good solution? The thing is, the Federal Reserve's July rate hike brought the federal funds rate to a range of 5.25% to 5.5% range. Now, this has been highest level in 22 years. Now, in between these 22 years, what actually have happened for United States? Many regime fall, uh, and U.S. was a very frontliner for it too, especially the CIA. Also, on the other hand, many wars been happened. Iraq, we can say 9/11 happened. We can say 2009 crash happened. COVID happened. Now Ukraine war has been already over a year or two. Now that's also been happened. So at that time, United States wouldn't have to have the space to think about to rise their rates up to over 5. Now this is the reality right now, is the highest in between the previous 22 years. Now they are thinking about cooling it down. They know it's necessary, but they know it's not gonna be very much obvious or very easy tasks to do. So they need more hike to get more liquidity in the market, so that people can have more options and scopes to explore more opportunities and more revenues that eventually can come and add to the economy. That's what actually they're thinking of. Now let's hope another news, because we are seeing 30-year and 10-year bond news to be released too on the coming week. So we can see that a 10-year treasury bond yield, this is the chart now. On the recent time of events, we are seeing that it's been creating a good channeling movement on bullish side. Now this is a good article, like, is dollars run since mid-July over? Now, the US and China report July CPI figures in the coming days, and they are likely moving in opposite directions. Like, US CPI is likely to rise for the first time since peaking in June 2022. China's CPI has been slowing down, but as they informed, that it may act in opposite directions. The divergence of policy is what is the driving force of the exchange rate, and the question is not really much why the won is weak, but why it is not even weaker. And the answer seems to be because Beijing's use of a soft power, like sanctions and its after effects, Huawei deal related issues. So there are many factors that yes, it could have been more weaker, but it's not. That's what they're eyeing on. Now, we have long argued that the improvement in the headline US inflation in H1 23 was low hanging fruit, and now in H2 the path will become more arduous. It begins within the week's July CPI report. A 0.2% increase will lift to the year over year to 3.2 to 3.3% from 3. So we are expecting an increase percentage of 0.2. So for a $1 trillion economy, and with the highest consumer base, this 3.2, this 0.2% increase in the figure is a very, a very rough ride. Though in numbers it may looks a little bit small, but it's a rough ride. Now, US CPI rose an annualized rate of 3.4% in H1 and 2.8% in H2. Now, At least if it continues to decline more, it needs to average less than to 0.2% a month. Now that's what they're expecting. For the China, the CPI is expected to have a turn a negative on a year-to-year over year basis, and PPI has been negative since the end of quarter 3 22. So they are thinking that the CPI news of the Chinese yuan will be, low. Now for the Japan, the most important data for the Bank of Japan probably is not about the inflation, but about the demand on August 8. Household spending for the June will be reported, and the base effects will works against it, and another sharp fall may on May's 4% year-over-year decline and April's 4.4% drop. So it's been dropping. We also know, and also in May, the current account surplus JPY 1.86 trillion, and that included JP 1.9 trillion trade deficit. So the seasonal pattern is strong, but there are some need to adjustment to for the purpose to yield curve control. Now for the eurozone, the economic diary is light next week, and there is a 70% chance that the day after the July ECB meeting to roughly a 37% chance now. Like pessimistic economic assessments have driven the market to downgrade, like the likelihood of a September rate hike from slightly more than 70% to a roughly 37% chance now. So no rate hike for eurozone. That's what they're eyeing on. Now for UK, the Bank of England lifted their base rate from 25 BP already. Now we have noted that US financial regulators have asked banks to grant forbearance in the commercial real estate space. Now UK is conducting the similar exercise. The Financial Conduct Authority has named and shamed financial institutions for passing on less than a third of the interest rate increases to the savers. So more savings, more money into the pool, then more strength on the banking side to push on the gaps and the sectors to stimulate more money into the economy. So that's what they're eyeing on, that we have already been discussed a while ago. Now for the Canada, the 3.44 billion deficit in May was a shocker. It's been on deficit. Canada is in a weaker zone, so that's why we were eyeing and telling you that yes, there's a chance that it may go a little bit high. Now let's move on to the next another news. More more rates to be hiked in the coming days. Now, U.S. inflation data may offer some comfort to the faith. Now let's get a view on this. The labor market is cooling, providing a disinflationary impulse to the stickiest inflation categories that should last the rest of the year. The FOMC's July rate hike likely was the final one before an extended pause. So Fed was thinking of that the scopes of rising rates needs to be paused, and the July hike was the final one. But for the overall CPI, which includes food and energy base effects, annual CPI is expected to accelerate to 3.3% from the previous value from 3. The measure started to ease from a peak of 9.1, so there's a lot more room to fill up. So yes, it has the room to grow more. And in China, data Wednesday could show consumer prices dropping for the first time in over 2 years as concerns grow over deflationary risk in the world's second largest economy. The resilience of the UK to ramped up hike rates will focus on GDP data because GDP data is coming up now, as also Britain's increased its interest rates. How its economy is reacting, it will be reflected on the GDP data coming. Now, for the technical side, we are seeing in some cases that gold is bullish in the short term. In the midterm, it's also bullish, and for the long term, it's also bullish. So, why? Let's have a look. Now, on the previous week, we had discussed that the market needs to be very much have to have a decisive movement. To create a very decisive movement, market needs to close a little bit above than this level or below this level. The thing is that last week, market didn't actually act like that way. It actually roamed around in between the zone for the last 2 weeks. Now, what can be the next scenario that we are eyeing on? Eventually, for US 30, as we are expecting a downside of US dollar, there is a chance that it stock price can go up, so does the indices value. So for that reason, we are eyeing on that if the price closes below that this level, which is 35,000 level. Now, then it has a chance to hit at least target one, which is 500 points below the level at the level 34,500. Now, from there, when the US dollar will act a little bit weak after the Thursday news, then there is a chance that yes, it can shoot up above and break this level. So that's what we are expecting for US 30. Let's hop in for the gold. Now for the gold also, according to the last week discussion, it's been it's been continuing on a zone movement for like kind of like 4 weeks. Now from here, we're many one can expecting some bullish movement, but for now, we're expecting some strength on US dollar before Thursday news. So this level can be break. Also, if high thing continues, at least this level 1895 level can also be touched. But in the end, when the US dollar could get weak on Thursday news, it can shoot up. Now that's also kind of like same for USD JPY. Like last week, we informed that it needs to break this zone. It did, but it actually go on a bullish side like for 110 pips, and also on the bearish side 120 points from the potential entry level. So we can say that for USD JPY, that could be a safe SL at 140 level, 40.2 level. Now if the price closes below 137.3 level, then we could have eye on 300 pips bearish movement. But before that, market may get a little bit choppy inside this zone. So for GBP USD, we have also seen that it's been inside the zone. Now this thing it's been good. It's been a nice thing to point out right now. As you can see, we had a discussion that if the price breaks this level and closes below this level, then it will go bearish, but it eventually didn't happen. Now for the GBP USD, if we can see there is an opportunity that it closes below this on the very first day of the week, then yes, initially it will touch this level. If not, and if it breaks this level 1.29 level, then it will eventually go higher and touch this level initially. For GBP JPY, it's also been on the same zone. It's been roaming around. Now initially we are seeing it a downside movement, but on Wednesday and Thursday newses, we are seeing an upwards. Same for the USD CAD. For USD CAD, initially we are seeing a bullish side movement up to Wednesday and Thursday. If not, and then after the Thursday and Wednesday news, it will go downward. So that's what actually we are thinking about USD CAD also. So this was actually our discussion for this week. I hope that you all will have a very profitable week ahead. And according to our discussion, we have tried to inform you about previous week's news, what we had talked about, what actually happened, and also from the charts. And also, we had discussed which news is going to come next week, how it can react. So we had read some of the discussions from the various blogs and articles, and after that, we have actually discussed the outcomes from the market point of view and which levels it needs to consider, which levels it needs to respect and break it, so how it's going to react. So this is what we have been discussed so far. So thank you all for watching our video. I hope you all like it, and if you like it, please share it and let other people know that about our video. So hopefully we will all have a very nice and profitable week ahead, and see you next week. Bye bye.